from our short break. I hope you've been catching up with some old friends and making a few new ones too. And also maybe thinking up a few questions for our next panelists for the Carazzas Marine Advisors and Co panel discussion, looking at shipping banks, credit funds, and the thorny question of Chinese leasing. Let me introduce our esteemed panelists. Morten Arntzen, a man of many roles, Chief Shipping Advisor for Macquarie Bank, also Chairman at Tankers International, International, a major operator of chemical tankers and board member of dry bulk shipping company TBS Ocean Logistics. Next, Cruz Shi, who spoke earlier, Executive Manager of Bocom Shipping Leasing, who we met earlier, already a leasing veteran in both China and Germany. Joseph Chipola, a lawyer and Senior Vice President at Wafra Partners, indirectly owned by the government of Kuwait, and also Chairman of Maritime Asset Partners. Now, there seems to be something about the shipping industry that all the main characters have at least two jobs. Or is it that they actually admit it, whereas in other walks of life they only declare one? Now, Yves Kalinara, who we saw before, Senior Vice President at Global Loan Syndicate at HSH Nordbank, and of course, our very own Demon of the Seamen, who we met earlier, Mr. Basil Carazzas. If I can first ask you, maybe just for 2 minutes each, of introductory remarks about your views of shipping finance, expectations, practices, and future trends before we broaden out the panel discussion, or 2 or 3 minutes. Morten, if we can start with you.
Can you hear me? I'm not going to repeat. I think Yves actually covered the what's going on in the banking traditional ship lending world very well, and I thought Basil did a good job. I'd say, to cut it short, there's still discussion of relationship banking going on in shipping, and I think that model is, I think, pretty much gone. There are still banks that practice a sort of relationship banking, but it's really more what I call accounting relationship banking, that they'll give you money provided that you do certain things, give them all your advisory business, all your bond business, all your deposit business, your operating business, or leave more deposit money in the bank than they lend you. And that's relationship banking with an accounting twist. I think the banking markets will get more difficult for shipping. I don't think they'll be easier. I was hoping I could ask the gentleman from Hamburg, the professor, if he could use his math to calculate what the correct pricing should be for a shipping loan. Because I think what he would come up with is, over the last 30 years, we have mispriced the product, and the product is being repriced to a level that's appropriate for what is basically a single B rated industry and mainly single B borrowers. And I think owners will have to be used to a more appropriately priced and structured shipping credit world. The flip side of it, this is probably the best time in the 40 years I've been in the business, not quite as long as Martin, to be entering into ship financing. I think you're talking about cyclical lows or very low levels in almost all asset classes. There's a lot more upside than downside, and I think owners are going to have to be putting up more equity into ships, and they'll be paying more. So it's a great time to be doing it. And our bank that I advise is open for business, and we look forward to chatting with many of the companies that are here today. Thank you.
For Chinese leasing, I believe in future we would have more business in Europe. And now we set up our Hamburg office is just to want to be near to our clients and ship owners and to know each other very well. Then we could develop more business, maybe in every aspect, and with not only with the big names, but also in future we would have the business with the modern size ship owners or small size one. Thank you.
Well, I guess, going down the row, I would say that we share a lot of the views in terms of the state of, ship banking and finance that have been expressed, so far today over the course of the conference. And we at Waffer Capital have generally, built our business in asset-based finance by kind of going where banks are retreating. And we've been active investors in shipping for some years now, and as part of seizing upon the opportunity that we see, we formed towards the beginning of last year a platform dedicated to the space, Maritime Asset Partners, which I've had the pleasure of serving as chairman of, together with a variety of, as it happens, Norwegian ship owners and investors to capture what we see as the opportunity. So we are open for business and kind of bullish on providing capital into the shipping industry.
No. Yeah. I think the challenge for a ship owner these days is that 10 years ago he just had to go to his friendly banker's office, ask for a loan, and he would get the loan. Now he has to cope with a variety of capital providers. So I think the very important message is that you don't have there's no lack of financing available, but it's not like 5, 10, 20 players who divide the world among themselves. It's a variety of 30, 40, 50 people. And as a ship owner, you need to establish dialogues with all of the various players and see what fits best for you. So I think this is the wonderful thing. They're not all the same, all the players. All here on the panel, you have a variety of people who offer different products, and I think this is also what ship finance needs, that you can choose between products. Also, I hear very often the complaints about Chinese leasing in Germany, and they're so cheap and they're over leveraging. I mean, this is a project which absolutely makes sense, and also in terms of expensive financing, I don't think that the costs you see for Chinese leasing are expensive, because if you compare it to bank financing 90%, then the banks would easily reach that level of interest you see with leasing companies. And I also do not see that this is a competition, leasing or lending. I think you should do leasing where it makes sense, and you should do lending where it makes sense. So from that point of view, I am rather, it's challenging, but I'm rather optimistic on the future of ship finance, and looking forward to working with many of you in the future. Thanks.
I just realized that I'm the only person on the panel that I'm not investing our own money or fiduciary managed money. We're mostly advisors, arrangers. We talked to several ship owners, and what stands out is that a great deal of the market is lost in the new market environment. 10 years ago, when it was relationship management and relationship banking, it was more or less cookie cutter business. You had your relationship manager, your contacts. They will give you more or less money, or they will give you some advice. In today's market, you have several choices, several products. Just see the nature of the panelists, what kind of money they invest. But if you were used to name lending and no in-depth understanding or analysis of the shipping finance market, I think that people have to be more careful and more proactive, because again, you have several choices now, and you have to be more careful, so to speak, of your financing choices. There are two transactions I know in the market that were financed in the last year, and they are already in default. And I think in both cases, people grabbed the first sort of money they found in front of them, and a year later, even in a market that is relatively decent, they are in financial trouble.
Well, thank you all, gentlemen, for those introductory remarks. And I'm going to broaden that out slightly now and ask a few general questions, but please feel, I'll address questions to each of you, but please feel free to come in after your colleagues have talked as well, so we can get a bit more of an open debate going. I'd like to start with Cruz, our special guest from China. Cruz, I'd like to give you three options, if I may, in this question. Should we all be suspicious of the geopolitical intentions of the Chinese and the One Belt, One Road policy, its huge ambitions and investments? Option one. Or should we be, the second one, should we be grateful to China for investing in infrastructure and industry such as shipping that maybe there is a lack of interest in elsewhere? Or the third variant, should we just look at the Chinese interest in shipping as an opportunistic investment in particular opportunities which present themselves?
I think the question maybe is a little big for me to answer, but I would try to answer the question, maybe number one. For the Chinese One Belt, One Road policy, I think it is not only for I believe it is not only for China, but also for China want to maybe to grow together with other countries, and not only in Asia, but also in Europe. So we heard a lot of news from the not only in China, also from the Western medias, that China have a lot of infrastructure in Eastern Europe or in Asia, and I believe some of them would really help the local people. Of course, some of the Chinese companies would also benefit from the policy. I believe for Chinese people, we believe the win-win policy. Not only the local people could benefit it, and for the Chinese companies would also benefit. I think that's the policy the Chinese government really want to have. Thank you.
Thank you very much for your very frank answer to that. You, Cruz, you've worked in Germany and China. How do the two approaches to financing differ? The traditional bank mortgage and the new leasing model. Joseph was saying that it shouldn't really be a war between the two, but how do they vary in practice? Do you think one of these models will triumph over the other in the longer term?
I think for the owners, if they would like to choose the bank loans, they would not consider the leasing structure, because leasing structure and the bank loan structure are quite different on the leverage, on the cost, and on the ownership. And when I first moved to Hamburg and I talked with some friends from the local banks, after our meeting, they told me before the meeting, they think Bocom Leasing is really a competitors to their banks. But after the meeting, they think we are really partners. We could do something together to help the shipping industry. Thank you.
Do you see it in that way, Joseph? Partners rather than competitors, the leasing companies and the banks?
So in a sense, you know, from where we sit, we tend to view banks and leasing companies as potential collaborators. Certainly there's some, you know, degree of competition, but since we're, and given kind of our cost of capital, often slotting in effectively in some sort of mezzanine position, right, having a partner effectively in the senior position or otherwise in the deal is often kind of a major pro for us. And so we'd welcome working with both types of institutions at the end of the day.
And if I can bring in Morten, many European banks have pulled out of shipping, and Asian banks such as yours, Australia now officially part of Asia, are coming in. What is driving these trends, do you feel?
Well, I mean, I think it's like the old bank rubber thing. That's where the money is. Macquarie is the world's largest infrastructure bank by a multiple, but they never lent to shipping. They saw enormous amounts of capital. About 100 billion has left the European shipping banking markets the last 5 years, and there's a big void to fill. And it's an industry that, despite all the problems, demand for ships grows every year. We saw Martin showed us 4% last year and 3.7% next year. The world needs this industry, so the world needs capital that can finance the purchase of secondhand ships and the construction of new ships. And so as I said earlier, I think it's a fantastic time to be doing ship financing.
So, I mean, you've worked through several shipping cycles, and you've worked with all the different types of vessels, with tankers, dry bulk, containers, cruise ships, offshore and gas carriers. So where we are today, you think that's a good place? I mean, have we been here before? The place where we are today in the cycle, and where are we heading from here?
Well, the last thing I'd ever say is this time it's going to be different. But I do think one of the reasons you have family companies here in Greece that have passed down companies through 2, 3, 4 generations is that they actually have practiced fairly sophisticated risk management. So to pick on the Chinese leasing alternative, if you're doing 80 or 90% financing of a new building VLCC trading in the spot market today, your break-evens can't work. In fact, it doesn't work for almost any asset class in shipping today. So that doesn't mean it's not an inappropriate way to finance a ship. It may be an appropriate way to finance 2 or 3 of the ships, but you better have a way to have your overall fleet break even, be able to handle you through an up and down market. And that's really simple lessons, and there's a lot of companies in this room that have been doing that for generations.
And the families, as you say, Morten, who have been here for generations, I'd like to bring in Eve Kalinara from HSH, Nordbank. Do these shipping families, they've worked in a traditional way, do they have to change the way they behave and educate themselves more about financial products, about private equity and credit funds, rather than the old days of having a cozy chat with the bank manager?
Yes, I think it makes sense to widen the relationship, but primarily the ship owners here in Greece, and especially the private companies, what I like about them when I was a relationship manager with Deutsche Schiffsbank is that you speak to people who put their own money on the table. So that's always a very good basis to start discussions. I think you, like I said, you should, in my presentation, you should try to establish dialogues with several capital providers and try to get an understanding what is important for them, and then you can match that with your interests. And it's an interesting situation now, and you can have various products available from the small bank, which is financing on a non-recourse basis, until the investment bank. So, and you really need to find out who is fitting most your profile, and also you need to understand how the banks steer their portfolios, what is important for them, and then you need to look how you can match that. And for one ship owner, this bank is appropriate, and for another ship owner, it could be another bank. So it's a lot of discussions, and yeah, it's good to have these discussions and get some education on various players, because I think that these players which you see here on the table, not necessarily only the companies, but only the type of capital providers, they are here to stay. And it's important to establish a relationship, because shipping was, and shipping always will be relationship driven, and it's always a people business, and that's the way how you should go forward also in the future.
I mean, we hear a lot, Yves, about why Greek families are suited to shipping. Why are German banks suited to shipping finance? You've worked at Dresdner and Commerz and other players. What is it about German banks that they've managed to develop this specialization?
Well, I think it's historically developed step by step, so it was not that someone was awakening and say, hey, let's go into ship finance. It was developing step by step, and I think the German banks were one of the first banks who were supporting the Greek ship community after the war, when they were building up their fleets. I know from my Schiffsbank days, we had somewhere a very, very old loan agreement signed by one of the very, very reputable old owners financing one of his very first vessels. So, and this step went step by step, and because the banks went through good times and through bad times. And I think this really helped establish a relationship. And you saw already also in the German banks, people staying in the banks. I remember when I joined Ship Finance, a colleague of mine told me, well, you're either in Ship Finance for 2 years or for 20 years. There's not much between. You either love it or you hate it. And I think the people who are in Ship Finance are very dedicated, and they learn to love shipping. And even these days, many of the people who you knew from the good days are still there in these days. And this kind of relationship building helped to establish this long-term interest of German shipping, of German banks in Greek ship finance. What you saw then in 2005-06 going forward was kind of acceleration, which was not done because the people were so stupid who did this decision, but the framework was there. For instance, if you look at Basel II, prior to the introduction of Basel II, you needed to have 100% risk weight and 8% you need to use as equity. Under Basel II, it was possible that you introduce your very own internal model, the so-called IRB-A model in this case. And the rating model looked back practically in shipping at the 20 years no default history. So the last big crisis in shipping was at the beginning of the 80s. So whatever project you were throwing into that rating tool, you got a great result. I remember an A- was a minor catastrophe. And so if you, and the result was that you then had the not the risk weight anymore of 8%, you had a risk weight of 100%, you had a risk weight of 8%. And this you needed then to put together with 8% equity. And so this gave room to some of the huge leverage you saw, some of the building up of the portfolios. And but this is not changing at all the long-term relationship between Greece and Germany in terms of ship finance, I think.
And Basil, what do you say to your clients who come to you as a shipping advisor and say, we're having trouble obtaining finance? What kind of guidance do you give them?
That's an interesting question, and it depends. You know, sometimes it takes more than just professional advice, I suppose. It could be some friendship advice. It could be trying to broaden the horizons. And again, you know, there may be situations where there is a case already in default that basically you have to put out a fire versus somebody thinking where the market is going and how do you place your company, position your company for the future. So it depends on the circumstances, and you have a very diverse situations and obviously a very diverse set of answers, which probably makes this market and this industry so appealing. And going back to Eve's comment, I'm getting closer to being 20 years in shipping, so I suppose it's an industry I like.
And you like the industry, and we've talked recently about your travel schedules, and you appear to be spending more time now in Tokyo and in Hong Kong and China than you used to. Are we in an era? Have we already entered an era of a polarized East-West competition in terms of finance, or is it still more of a transitionary period, just moving from one dominant power in finance to another?
That's an interesting question. I don't think there is a definite answer. Probably I would say it's an overall long-term trend, looking further into the future. One of the concerns or points for one to consider is most of the Asian financiers, whether banks in Singapore or leasing companies or financiers, if you show up as a US or UK or Germany or Greece-based ship owner, they will not open the door for you and give you money. Quite often they want you to see you have a local presence there. And sometimes more than a token presence, they want to see you have some operations, some business. Therefore, yes, it seems that the Asian broadly defined financial institutions have more capacity and more appetite. On the other hand, it doesn't mean that they provide financing for Western companies just for the asking. So I believe, again, it's a long-term trend and something for somebody looking for financing to consider, and also going back to the point, how you position your company for the future.
And we've talked about Europe and Asia. Joseph, the Middle East, in between the two, where your ultimate owners lie. Are we going to see the development of more shipping hubs there, where expertise and finance are both being developed and on offer?
Well, it's certainly possible. In terms of where it's located, I suppose on the finance side, it's perhaps a little bit hard to say. I can say that our clients, all of whom are principally in Kuwait, do have a strong appetite for, let's say, asset-based finance, and particularly transportation finance. The region generally, let's say, can be divided into investors who prefer, let's say, conventional finance, and a fair amount who like Sharia-compliant investing. Sharia-compliant investing actually has a certain affinity for these types of asset-based transactions. So ship finance, ship leasing is something that kind of, strikes a deep chord with some of our kind of core investor clients. And so to the extent that translates into more of a local presence on the ground, frankly is unclear to me, but in terms of things they want to invest in, this industry is deemed pretty attractive, at least at present.
So in terms of Sharia compliant Islamic assets, do you feel we're just at the beginning of shipping's relationship with that asset class?
As I understand it, there have been groups and transactions that have been done, over the years, frankly, for some time, using those structures. But as perhaps like anything, some of these institutions. This is now based more on my own personal experience. Have invested kind of more regionally and to some extent less globally. And let's say as word spreads, and hopefully there'll be some successes here and there. One can perhaps see it being a more prominent, source of capital or structuring device to bring new investor. Really, it's bringing a new investor group potentially to the table.
Do we have a couple of questions from the audience at all for our panelists? Yes, a gentleman just here. Do we have any a roving microphone at all, or yes, the microphone's just coming to you, sir. Please, could you state your name and company and then your question?
Thank you. My name is Stelios Stylianou. I'm a senior partner of Stylianou and Stylianou Law Office in Piraeus. I would like to address to the distinguished panel a question relating to the comparison between ship financing through leasing and the traditional mortgage financing, or whether there are further modern shipping finance modes, and also to inquire why we are talking about Chinese leasing. Does that mean that leasing has not been developed in Europe, for example, or in other banking institutions in the US, etc.? Is something which, an area in which Chinese have now the first role? Thank you.
Thank you very much for your question, Mr. Stylianou. Who would like to take this question?
Well,
Joseph?
maybe I could at least start in part because we've transacted both on a conventional lending basis as well as doing leasing transactions, and for us, at the end of the day, it comes down to the bargain you strike with your counterparty. These are just the way we perceive it, kind of in the abstract, is it's a different way. Each one is a different way of apportioning risk, as may be mutually agreed. And we have the flexibility to consider, both types of structures, and frankly, a variety of different versions of each, whether it's a finance lease or operating lease, kind of more traditional loan, or perhaps more of a stretch senior loan, or preferred equity. It's just a different way of coming up with a bargain between parties and apportioning risk contractually, is how I see it.
You'd like to come in?
Yeah, if you look over the last 4 decades, in the 70s and 80s, there was lots of leasing done in the US for barges and things, tax-based deals, and people found out that when you did 90 or 80% financing for assets that trade in the spot market, you eventually blow up. Then the Norwegians did it with KS financing in the 80s in Norway. It's really just a variation on a lease. The difference is a big Chinese company or a Norwegian KS, and that almost blew up the Norwegian banking scene for a while. And then the Germans did it spectacularly in the last decade and blew up the entire German banking ship financing system for a while. Those were leasing structures of German KG. And what is going to survive? I think it's going to be providers that do it with a balance to companies that can actually afford to have some lease financing and some not. But it's not new. It's been around for a long time, just that the industry tends to blow up lease financing for spot providers of the people that trade in the spot market. It doesn't work.
Thank you for providing that historical perspective for us. Would anybody else like to come in from the panelists? Basil?
I think although a mortgage and a lease are fairly comparable in several respects, one big practical difference is that in the lease, the title of the asset of the ship is with the lessor, the leasing company, versus with a mortgage, remains with the borrower. And I have a case where a certain owner, although a leasing company was offering very attractive terms, in my opinion, he will not consider the transaction just because he didn't feel comfortable passing the title of the vessel to the leasing company. Probably some of it, it was sentimental, but also from a practical point of view, if you default on a mortgage, it takes some legal footwork to lose your vessel versus with a lease. Basically, you can lose your vessel in short order once you have a default. So I think, like, from a practical point of view, that's a big difference. Although in every other respect, there are great similarities.
Thank you very much. And you'd like to come in, Joseph?
Yeah, and I think I would like to add that
Sorry, Yves. Yeah.
the leasing company and also a bank, they have a fixed income mentality, so they don't want to make use of the vessel. You need to answer for both of them the question how you pay back the loan. You need to have a convincing story, and you need to show them how you will do that. And there is it's difficult to say that one is dominating the other in the future. So there will be room for mortgage-based ship financing, but this is always connected with a strong name. So you see, I think mortgage-based ship financing together with name lending, and you will see then products which are very strongly fixing only on the cash flow. So yeah.
Yes, please.
Can I just agree with one point of that? Certainly there's name lending, but people that finance assets, ships, with mortgages, with reasonable advance rates, will quickly find that there's lots of small and medium-sized Greek owners that actually know how to trade the ship smartly, operate it smartly, and doing a safe, conservative mortgage loan to them is perhaps safer than doing a mortgage loan to a highly leveraged public company that doesn't make money.
Thank you very much. And it's good to finish on that local note about the relationships with the local owners. I think we've discussed this ongoing relationship between leasing and lending. I mean, it's almost like a long-term marriage. There are calm waters. There'll be an occasional war, and maybe some kind of successful period of cohabitation between the two. So thank you so much for the question. Thank you to my panelists for an excellent debate, and please put your hands together for our panelists.